Okay, so let me get this started. What I'm gonna do is first I'm gonna go over the differences between swing trading and day trading for you. And then after that, I'm gonna show you how to set up charts. I noticed a lot of people had a lot of problems with entry and exit points. And I got a couple of ideas that I want to run by you on when to enter, when to exit. So let's first start talking about the difference between swing trading and day trading. Now I'm going to use my favorite tool of all time when I show you a couple of these examples, and I would recommend that you guys use them too. And that's Google, YouTube, things like that. You know, you have a lot of free resources at your disposal that you should be putting to use without having to, you know, just ask these simple questions that you could just find the answer for yourself within seconds, or wait for Zoom sessions, because I would prefer to run later Zoom sessions that are going to be more advanced on chart patterns and things like that. So the first one I'm going to show you is swing trading. And technically the definition of swing trading is when you hold a stock for more than one day. You're holding the stock anywhere from 2 days up to a 9-day maximum period. And the reason why you want to hold it for up to 9 days is you don't want to be able to have all of your capital tied up into one particular stock. When you do that, you don't have as much flexibility in what you could do, what you could purchase. When it comes to swing trading, a lot of people make the mistake of chasing paper. And if you see your account is up $100 in 2 days, for example, say you buy on Monday and Tuesday, you're making $100, $200. Sell it. You made enough money. You don't need to continue moving on, you know, chasing the paper, because you're always gonna, and whoever's drawing on my screen, don't make me have to disable the drawing part. Anyways, when you're making that kind of money, if you bought on Monday and you see on Tuesday that you have, say, $200 or made off of that particular stock, and you see that it's starting to go sideways, and a perfect example of a sideways pattern I'll show you right now from today. This is a sideways pattern. You're not really seeing much growth. The price isn't really growing much. It topped out over here, and then once it hits here, it's starting to go sideways. And for those of you who use TDA, you could always, you know, use these things right here. They move side to side, it'll help you. As you can see, the highs are the same, the lows are roughly the same, they're not moving. That's a sideways pattern for you. There was another one earlier in the day right here. This was a major sideways pattern. So say you bought something, you made some money off it, now you're seeing this. You keep going to the same profit, you keep losing the same amount. You keep going to the same profit, losing the same amount. Sell it. You know, sell it when it gets here. Move on to something else. Now, there were people who bought into a stock that was in a downtrend, which is what you would see right here in the beginning. That's the time that you don't want to buy it. What we call the buy-in zone is confirmation. Confirmation is when you see at least 1 to 3 full green candlesticks in a row. So that's how you would swing trade, and day trading is no different. Now, day trading, what you would do is, day trading is, you know, you buy and sell the same exact day. Now, for people with cash accounts, don't get it twisted, don't get it wrong that you think that you're immune to the pattern day trader rules, because you're using your cash, but then once you use it once, it becomes unsettled cash. So you can't use it again until it settles, which usually takes up to 2 business days. So for proper day trading, you have to enable margin, in my opinion. And then aside from enabling margin, you have to have at least 25,000 account value. Now, day traders, what they do is they would see this chart in A and D, and they would buy in right around here, and they would sell right around here. Some, the ones who want to be more risky, they would wait and sell here. But that would be day trading. So swing trading, you hold from 2 to 9 days. Day trading, you buy and sell that same day. Scalping would be buying here, selling here, buying here, selling here, buying here, selling here. That's why it's called scalping. You're literally just scalping over the smallest amounts that you could, but even drops fill up a bucket. So this was another one. Another day trading pattern would be right here.
Just Head Mitri, sorry to disturb you. I just pinged you one link. Can you just screen share to Market Masters? Just click on that and share it while you're talking.
Yeah, sure. You pull up the chat. All right, so I got them pulled up, and you want me to screen share to them?
I think he just said share the file in this chat window.
Okay, so this would be another day trading opportunity over here. Right around power hour, you saw a major drop. And then after your major drop, you saw this. This would be a day trading opportunity. So now you have a basic understanding of the differences between day trading and swing trading. Day trading is holding from 2 to 9 days. That's for swing trading. I'm sorry. Yeah, swing trading is holding for 2 to 9 days. Day trading is buying and selling within the same day. But there are huge differences when it comes to the capital that you need to have. If you don't have at least 25,000 net liquid, you cannot apply to be a pattern day trader. And if you are flagged as a pattern day trader, your account will be frozen. Now, aside from that, the next thing you want to go into is pattern setup. So what I'm going to do is I'm going to show you guys the easiest pattern setups for beginners. So we'll use a simple CLOV stock. We're going to go to a 1 day, 1 minute time frame. And we're going to go into this section. Let's get a little closer in. So let's take a look at this. The studies that you want to always have are these. Well, you don't need this one for now. These 4 studies are excellent for beginners. You have your simple moving average that is always set to 10, as you can see over here. Then you have your simple moving average that's set to 40. Then you have your RSI, which you can leave a default, and your MACD, you can leave a default also. Just add it and that's it. Click apply, click OK. Then you go into here and you do overlap volume. So the blue bars are your volume that are behind. I'll run through each one of them for you. The volume, the higher the volume bar goes, the more volume you have. That's pretty self-explanatory. The RSI that you see right here, this is going to be, for simplicity's sake, I would just say that this is tracking the price movement of your ticket. So if you see this downtrend going over here, You see it's broken below support. This is your support line at 30. Once it's broken below support, if you see it keeps breaking, this is not a good time to buy. A good time to buy would be after it's already finished with its downtrend. And you see you got that confirmation that I was telling you guys earlier, at least 1 to 3 green bars. Just be careful for fake outs. There are such things as fake outs, which I'll show you later. So you got to be careful for fake outs. So once you see at least 1 to 3 green bar confirmation, that's when you buy in. Once you buy in, so you bought in at say 11 over here, 1136. It hit a high of 1166. Now you have your new established high of the day. This is going to be your new established low of the day. As you can see over here, it continues going to a sideways trend, but it keeps trying to break that new high. Over here, it breaks it by just a couple of pennies, and then it keeps going, and that's when it continues with that spike. Now, if you were a day trader, you would sell somewhere right around here, maybe here. If you were a swing trader, you don't care, because for you, what does it matter? You got in at the low of the day around 1130, and the price just keeps moving up. So for you, if you're a swing trader, it doesn't matter. You're still in the green. Now, obviously, the day ended at 1173. You bought it around 1130. You're going to be in the green. For you now, you have to watch after hours, which keeps going up. And then you're going to have to watch pre-market. Now, once it hits the second day, say you bought 1,000 shares, and after my pre-market, it's still at 1185. You bought it at 1130. If you bought 1,000 shares, you're making $10 per penny. So you have a huge opportunity to be able to make a lot of profit from this. Now, so that's the RSI. That's how you judge it right here. As you can see, it's always gonna follow. The MACD is also very important. Now, let me explain to you first what the MACD does. It tracks the history of the buying and selling of the stocks along with the price. That's my preferred explanation. When you see bright red means the price is down and it's still going down. When you see dark red, means the price is down, but it's starting to move back up. When the bar is bright green, that means the price is now moving up above its average. The price is up above its average and it's still moving up. When you see dark green, that means the price is up above its average, but it's moving down. So how is this going to help you? Say you bought in right around here and you hit this part right here. And this brings me to the whole idea of you guys panic selling. You panic sell when you lose money. That's paper hands. You ever heard the two expressions, people have diamond hands and paper hands? If you have paper hands, that means that whatever you're doing, you're getting frightened. You can't stay negative. You start getting paranoid, you start getting worried, and you end up selling off. That's just not a good way to think about it. If you go negative, or say you're at break even and you think to yourself, well, okay, if I sell now, I'm not gonna lose money, but at the same time, I'm not gonna make any money, but at least it's better. Well, that doesn't always help. The kind of mentality that you have right there is you just don't want to lose money, but you're not really putting emphasis on making money. So in order to be successful when it comes to trading, you have to have strong hands. You have to be able to take a loss sometimes. Like, I'm gonna use my usual 1,000 share example because that's my standard buy-in from 1130 to 1166. That's a 36-cent rise. You would have made around $360 over there. And then it fell to its lowest of 1148. So you would have probably been down to about 150, whatever. And then over here, you would have been $30 up. Now you're thinking, I was just up 360. Now I'm up only about, at 1138. You bought it in at say 11:31, I'm only up $70. It's bullshit. I'm selling right now, taking my $70 and running home. Now you did that, and then a lot of you said this in the chat today. A lot of you said this. I was trying to count, and then I got a little tired of counting because my head started to hurt. But then you said the second I sell, boom goes the price to the moon. There's your example. So this right here was the same example that I showed you on AMD. It's a sideways pattern. You got the same lows, you got roughly the same highs. And this is a 1 day, 1 minute chart. With swing trading, I always recommend using a 1 year, 1 day chart. Why? Because swing trading, you're not going for something that's going to be as small as just a couple of days. Now you see over here how it's going. You see that Clover high was 28.85, but that was the high for a while. So chances are it's not going to hit that. Over here, this is consolidation. That's what we call consolidation. This was a squeeze. Somebody started to squeeze, they made their profits, they sold off. Now, this is the true valuation of the company. The company's established its normal, what would you call it, a price point. So the way you could do that, and I don't recommend you guys use this study if you're still new, but this is more for moderate users. You could always add Keltner channels. Keltner channels, go into the settings over here for factor. And factor is difference between the lines that I'm about to show you. Increase it by about 50%, from 1.5 to 2.25. Okay, apply, good. Now you see these 3 lines appear. What are these 3 lines? This is the upper price band. This is the average, and this right here is the lower price band. So if we look historically back at it, over here when it was around 11, it went past, it broke its upper price band. Then it went down to the average price band, and it continued to go down to the lower price band. This would be the optimal buy-in for somebody that's new. Why? Because it's really unlikely that a steady stock is going to continue going below the lower band prices. And as you could see, that's exactly what happened. From there, it starts going up and up and up. Then it breaks the upper price band again. And as all stocks, they all come in waves. You see that it begins to normalize again over here. And now it's just about average, but you could see over here it's starting a downtrend. Now, some would argue that backtests show that you buy in around average. I prefer to buy in just around lower. That would be the same case with AMD. We could even backtest this right now. This is the upper price band. As you can see, every time it touches the upper price band, it goes down to the lower price band, and then it starts going back up. It hits the upper price band again, it goes down, touches the lower price band, and goes back up. Here is where some argue that you buy in at the average, and they would have bought in at the average, they would have made a nice profit also. So, backtests have shown, when they did backtests 10, 20 years back, that there's all kinds of techniques and methods, and they all have about the same win rate when it comes to the Keltner indicator. But there's one thing that remains constant. If you buy when it's touching the upper price band, you're bound to lose money because it's always going to go down. This right here is from August until July. So look at it, 1, 2, 3, 4, 5, 6, 7, 8, 9, whatever, almost 12 months. And as you can see over here, it was in the lower price band, huge bump, and then went down to average, but a little bit after this average touch and attacking the upper band again, it still went down to lower. So you got to time your buy-ins around that. For those of you who got on that staff thing today and yesterday, I'll even pull that up. As you can see, I can't even pull this up on a wide scale like that. This is where you are right now. That's why I'm fully expecting this stock to drop. And this is a 1 day scale. What, year, 1 year, 1 day. Over here is the same patterns that you saw before. It hits all the price bands, goes down, and then it goes up. And then if you watch it, you would know that this is about the time when you want to exit. This would be a safe exit. This right here, depending on how it goes on a 1 day, 1 minute chart, is how you would know if you want to get out beforehand. Now, to give you an example of that, let's go to AMD again, because that's a stock I've been watching most closely. And let's go 10 days back. Now, I think I bought in somewhere around here, and it was going up for about 4 days in a row. First day it went up, second day it went up, third day it went up. This is what I sold. Fourth day it went down, and I sold. Why did I sell? Because my average price, I think I bought in around here. Yeah. Now today, as you can see, after it went down and it hit that lower price band that I was just mentioning, you see it keeps going up. Now, I don't trade pre-market or aftermarket because the volume attached to those things is just not consistent. There's so little volume that the smallest changes in buys and sells could drastically alter the price. When the market's open, you have to take into account that now you're looking at volumes that are not, like, look at the volume when the market's open, the volume bars, compared to the volume bars when the market's closed. They're non-existent. So anything here is going to alter the price. That's why you often see pre-market a price stock will spike and go up, say, like $10, $15, $20 even. And then the market opens and you see a sell-off, like in this one right here. This right here is a price increase from 93 to 94. That's a $2 price increase, topping out at about 94.73, so 2 and change. And what happens? Once the market opens, even though it touches high top band, it dropped. That sell-off came. Why? Because these people manipulated the price pre-market, made their profits by selling off on market close. And who does that affect the most? If you buy pre-market and you're one of those few people that thinks, well, I'm going to hold because it's going up pre-market, so it's going to go up when the market's open. You're wrong. But this is what happens when the market opens with a high price rise. Only in rare situations will you see momentum like this. And the times when you see things like this are when things like the AMD and Xilinx merger were announced. So when the market opened, this is when the hedge funds actually bought in themselves. They wanted to make sure that everybody knew that they were backing this deal. The reason for this price movement today to the high of 95.27 is because AMD and Xilinx merger got the antitrust approval from the European nations, saying that the lateral movement of the companies would not cause a monopoly where they would corner the market. And antitrust lawsuits, for those who do not know what that is you cannot have priority control over one sector of the market. For example, you cannot run all the burger joints in America. You would get hit with an antitrust lawsuit. So with a chip shortage on its way right now, AMD has to be very careful in what they do because they don't want to get hit with an antitrust lawsuit where Intel, for example, complains that AMD has cornered the market on the chip shortage. And that's why their price stock compared to Intel. Intel is going sideways, AMD is growing on top. Same day when AMD got the Xilinx merger news, look what happened to Intel's price. It dropped. Why? Because Intel is the direct competition. Anyway, so
would NVIDIA be in competition to them?
no, NVIDIA, they're in their own game, but there are some people who are saying that it is possible because AMD does make graphic chips also, but NVIDIA has been doing it much longer than AMD has, and that's their specialty. NVIDIA's stock price, you can't even compare it to both of them put together. 819 per share. Today had a growth of $18, and it's been growing nonstop for the past 4 days. So if you bought on this day at 785, if you bought a call option for say 800 with an expiration date of 30 days from now, 4 days later, you had a high of 820, you would have made crazy amounts of money depending on how many contracts you got, because you have to remember implied volatility or the volatility that the options generate. But back to the studies, which I started off on. So anybody who wants to write this down real quick, the easiest for beginners is just the SMAs, one set at 10, one set at 40. 10 and 40, by the way, this is how many days back it's looking. And if you're thinking, what's the difference between exponential moving average and simple moving averages? Simple moving average is gonna put less weight on the most recent price changes, as well as it's gonna smooth out the lining for you. RSI, that's already, I told you, that goes hand in hand with the price. It's a relative strength index. So it's basically the strength of the current price. MACD histogram. I like to use the histogram, as you can see over here. You have histogram crossovers. You have two lines. You have ones with prices. You have the regular MACD. The TOS description for it is the moving average convergence difference. Histogram is a study that visualizes the difference between the main MACD plot, which would be the first one, and its signal line, plotted as the histogram. This indicator often produces valuable signals for trend analysis, which is what I was just explaining to you. You could tell down here, how do I close this shit out? Here it is. You could tell down here by the trend. Bright red, which means the price is down and going down. Dark red, price is down but going up. So technically speaking, if you wanted to get the best buy-in price for this day right here, say, let's zoom in on that. Let's go here. We'll change this to 1 minute. If you wanted to get absolute best buy-in price, it will be right here. That was the absolute best buy-in price. This was around the time when the price was at its lowest, and then it started to go up, from judging by the MACD. But that's why you also have your RSI. You can't just look at one of these, because then the RSI over here shows you it never broke the support. By the way, these two yellow lines, the 70 is called the resistance, the 30 is called the support. If it breaks support, that's usually a bad sign. It means there's a possibility it could go lower. So you have to keep that in mind. If it touches support like it does here, 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 all over again, then the next step is it's gonna go up unless it breaks the support. So you could say, if you wanted to scalp, you could scalp from here where the price was NVDA also, you don't want to use something like that. Let's anybody got a stock symbol they want to see? I got one for you that I saw a lot on the channels today. ATHE. Let's move back a little bit. There you go. So if you bought in here, see that it touched the the RSI support line. This is now the support, and that's, I'm showing, see, this is why I don't approve of beginners using all of these Keltner's lines, RSI lines at the same time. So I'm going to take off the Keltner's for now, just to make it easier on people who are newer. You see over here, well, I want to show you this real quick. This is the long-term average, the 40-day simple moving average, the red line. The blue line is a 10-day simple moving average. This right here, when the 10-day simple moving average goes below the 40-day simple moving average, this is called a death cross. When you see things like this, you are always going to see the price drop. And I'll point it out to you right now, just back testing these past couple of days. Right here, the 10-day moving average is below the 40-day moving average. And where's the price going? It's going down. Once that 10-day moving average crossed above the 40-day moving average, as you can see, the price is moving up. It touches it right here, and you see a little price drop, but then it hops back above it. This came to sell off, and right after the sell off, which by the way, this is the time difference in here is from 11:01 to 11:05, so 3, maybe 4 minutes. This is called the golden cross. When the 10-day moving average goes above the 40-day moving average for long-term traders that are doing investing that are, say, a year long, then you would use a 50 and 200-day moving average. You could use a 50 and 100-day moving average. It's up to you, and it's how long you want to keep your investments for. But once right here, once this death cross comes in again, when the short-term moving average goes below the long-term moving average, you could expect the price to fall, and it does. And it stays that way until it goes above it again. Once right here, you get that golden cross again, the price goes up. Unfortunately, it doesn't last for too long, but that's the basics of the market. You can't predict these kind of things. And down here, once it falls into that death cross again, the price goes down and stays down. And you can see it happens all throughout the entire chart right here. Death cross, price down. Golden cross, price up. Death cross, price down. Stays down and stays down. Oh, look, we got a little golden baby cross right here. That's what I call it, a golden baby cross. Do a quick little jump. And then the 40-day stays above the 10-day, and the price goes into a slump. Once you get that golden cross again, the price goes back up. Just from knowing those two very simple to read indicators, you'll be able to predict to a certain degree how far or how long you're going to be able to keep making profits. Once you hit here, you don't even have to wait, for the red bars to sell. You could wait for the death cross to sell. Because if you bought here and sold here, you still made a profit. You bought at what is it, about 1162, sold at 1171. You still made a profit. Same thing here. Buy here, you don't have to sell until you see this cross. When the long-term simple moving average goes above the short-term simple moving average. And the reason why that is, if you're thinking to yourself, why is it that this matters so much? It's because the long term is tracking the price movement over a longer period of time. So you want it to stay above the short term. If the short term average goes below the long term, that just mathematically makes sense that something's wrong. So that's why I always recommend, if you're just starting out, start out with these two simple ones. So 1 to 10 days, 1 to 40 days, if you're doing like swing trading or day trading, especially. If you're a swing trader, you can message me. I'll show you some other ones. The RSI, the Relative Strength Index, that's always going to show you good times to buy in. For example, if you buy in over here, and then you message me saying, why did I lose money? I'm not going to reply to you. Because it broke resistance, and you decided it was a good idea to buy in and then keep holding. Obviously, if it breaks resistance, it's going to consolidate. And consolidation is whenever a stock breaks resistance, it's going to consolidate. It's going to have to establish a new support. It's going to have to establish a new resistance, which is basically these two things right here. Because if we look at this part right here, if this was breaking the resistance right here, and that price was $1.70, why is $1.73 now showing over here in the middle? It's establishing itself. But this right here was its original support. They got higher highs and higher lows. It's establishing new highs. but it hasn't established a new low. So what does it do? It consolidates, which goes down to here. This would be a period of consolidation, and then people keep pushing it back up. But with stocks like this, it's also hard to tell. I mean, even I have a hard time reading meme stocks because sometimes you could see a stock like STAF that went from pennies, I believe it was on Friday, to several dollars in one day. Yeah, penny stock over here, and then it breaks the $5 level, which is the NASDAQ compliance, and then it goes back down. But this right here, this is not a normal jump for me, especially over the news. I think the factor that the catalyst that sent it through the roof was the fact that it extended into France or something like that, if I remember correctly. Can't really keep track of all the stocks anymore, especially when you're making watch lists. For me, I was looking at this one today, and I actually called this out saying that the pricing on it might be affected just because of the news of STAF, because they're both in the same sector. When one part of the sector gets affected, other companies in that sector get affected too. So if AMD goes up, you could expect Intel to go down sometimes. If if they're running, say, not just instead of as competitors, they're doing something where it's along the lines of working together, then they're going to go up. This is one of the stocks that we discussed on our Discord, Absolute Alerts. The space race began after hours over here, and the market jumped. But this also goes to what I said earlier. Never look at the after hours movement, because look what happened when the market opened today. It went from about 43 to a high of 58. Market opens, it comes back down to 44. Closed at around 45. So in reality, say I wanted to join the opposite team of instead of being a bullish person, I want to go bearish. I would have seen this pre-market activity and a market open. I would have shorted this position. Yeah. For those of you who don't know what that means, the shorter stock is to bet that it's going to drop in money. So long positions are betting that it's going to go up in money. So if you open a long position here and sold here, you're betting it's going to go up in money, and you what? And then the short would open a position here saying he bets it's going to go down, and he would have sold right here, and he would have made money just the same way you made money. Except what does he do? He sells a stock that he does not currently have, and then he purchases that stock. It's called buy to cover, and he gets paid the difference from the high price to the low price instead of you getting paid from the low price to the high price. That's another reason why I say every day I like to wait for the first couple of minutes just to see how the market behaves itself from 9:30 to about 9:45, because that's the primary time where you are literally watching the market to see who's going to dominate. Is it going to be the bulls or the bears? And for those of you that have seen my avatar icon, it's a bull versus a bear on Discord. So now that we've gone over swing trades, we've gone over things like this, we've gone over panic selling, we've gone over studies. I'm gonna unmute people, try to keep it civil, or better yet, instead of having everybody asking questions, if you have a question, just post it in the chat and I'll try to answer it.
Imran,
This software is TD Ameritrade's Thinkorswim.
can you look up CLSD?
So whoever just said that, put that in the chat. And first I'll go over Alyssa's question for MRIA. So over here, I saw this going up. If I was using um, the two studies that I told you about, this right here is what I would have been paying attention to, that 40 moving average is staying down while the 10 is going up. And at market open, I would have watched this and I wouldn't have bought in, because you could buy in if you're that quick, if you're using like Active Trader. I don't know if they have Active Trader on here. Let me check real quick. Yeah, if you have Active Trader, then when I'm sitting there and I'm day trading, I click this button. I have my share set. I click this button, my order goes through instantly, and I'm seeing my profit loss right here. The second I see this downfall begin, I click sell, and I'm hoping to get away with all that profit. But to do something like that, you first of all have to have extremely fast reflexes. You can't even glance onto another screen, nothing like that. So, you know, right now I'm more of a swing. I'm doing more swing trading. So I wouldn't have bought in here just because for me it would have been risky. And usually when you see rises that quick, people do take profit. This right here is people taking profit. And you can see the volume hits all-time highs, then gets lower. And you could see right here as it's going up that the volume is getting lower. Once the volume hits here, this is called volume exhaustion. The volume has already gone down to a very low point. So I would have kept watching. I would have been watching this being above the 10 SMA. Once I saw this over here, I could have bought in over here and sold here. I would have sold around here. After I saw the first confirmation of the red bar that the price was going down. So yeah, I could have slowed down here. Then over here, once you see this, you see the volume gets real high right over here. And this is right before it hits this golden cross. You could have bought in, but it's risky because right here is going to lead to a different lesson where you look at things like fake outs and things like that. You have to watch out for fake outs. They do happen. Sometimes you go into a golden cross and, you know, 4 green bars in, you know, it's plummet down. But the second you saw this sideways pattern beginning, or actually this would be a downtrending pattern, because as you can see, the prices are going, instead of higher highs and higher lows, they're going lower highs and lower lows. I would have sold off somewhere around here. Definitely not here, because this was just a bear attack. And also you could, if you take a look at candlesticks, this is the candlestick. This is the wick. The wick shows you the lowest price it touched. The candle shows you where it opened and where it closed within that 1 minute candle. So in this 1 minute candle, this part shows you the ranges of the price. This shows you the top. Now, somebody said CLSD. Okay, so for today, CLSD looks like an all-day runner to me. I mean, I'm not going to tell you the price difference is huge, but over here you had a nice confirmation. You had three of the candlesticks that are green. You saw the simple moving average short term was moving up. You could have bought in here, and this is, as you can see, it's going sideways. I usually don't draw in here, but I try to draw. You could take a regular line and you see that the bottoms are staying the same. The tops in the beginning are roughly the same. And then over here, you could see that the lows are getting higher. And the highs are also getting higher. Here, then you have this jump up over here, the consolidation, but even going from here, which is where it's established, this is called establishing new highs of the day. You see that sometimes in the alerts channel where we say there's a high of the day, but these little, drawing tools, they'll help you out all. So you could see things like this. You could see if it's in a sideways pattern. Same thing over here. This was a sideways pattern. Got it from here to about here. And then you got the breakout again. And why is this going to sideways? Like I said, always around lunch, expect the sideways pattern. And this was, as you could tell by lunchtime time frame down here, lunch, and then people come back from lunch, it goes high again. Towards the end of the day, consolidates again, then you got your after hours. I'll do one more, which is MSFT. Then I'll take any technical questions you guys might have. All right, so MSFT, it's been a steady uptrend since about June 20th. And if you were a swing trader, again, I would bring in for myself, this is what I would do. Configure it from 1.5 to 2.25.
The video that you guys are watching, right? On the cell phone, probably that's what she's looking for.
So right here, it hit the lower band, touching the upper band. Hits the lower band and then it keeps going up. I'm assuming it's probably going to go down soon.
Or watch
However,
TV. Let's watch TV.
this right here would have been a very nice. This one right here would have been a very nice swing. I would probably assume you would have made a decent play, but at the same time, I said never hold for more than 9 days. You would have been holding from the 24th to the 5th, so 15, 16 days. So yeah, but don't forget, this is 277 a share. You can make double this if you have a small account value. JDB, yeah, I use Heikin-Ashi. Anybody who was wondering what I was just talking about, the JDB on TradingView, Thinkorswim, I know TradeStation has it. I know Webull has it. The candlestick mode that I prefer to use is Heikin-Ashi. To each his own. I prefer the way they look, and some people have their greens that are not filled in. I always set mine to fill in, which I think it's in here. Yeah, you fill up. And another thing I like to do is in the time matches, I always like to leave 3 bars on the right of empty space. So this way, as the next bar begins, I still have this right here, this little gray space that I call of just where I don't have to read the last bar right as it's squeezed up against the edge of the chart. Yeah, Webull does have SMAs. But depending on who you use, they might just call it moving averages. TD Ameritrade has 3 different averages, the simple moving average, exponential moving average, and a couple other ones. But Webull does have moving averages. Just make sure it's a simple moving average and not exponential. And so let me see, Karen, she wants to know, that's a question I have. It looks like high Ganache, but what's with the candlestick is deceptive because the bear aren't showing true up or down movement at the time. No, it shows you up and down movement in real time with HA candlesticks. If you're using the 1 day, 1 minute chart, you will actually be able to see the candle move up and down little by little. But the main thing for the moving averages, like I said, simple moving averages, it smooths things out. Exponential moving average, it puts more pressure on recent prices than it does on the overall price in the length that you set. And that brings me back to what I said in the beginning. For example, me and Absolute, oftentimes, like if we don't reply, it's not that we don't want to, but a lot of the questions that you guys ask, if you just search for it, you would save yourself a lot of time in waiting for a reply. Right here. Simple moving average is the average price of a security over a specific period. Exponential provides more weight to the most recent prices in an attempt to better reflect new market data. So if you have a question when it comes to indicators or setting them up, for example, then you could say, ask me or ask Absolute. It will tell you what's the best way to set up an indicator or what kind of settings we use. But if you're, when it comes to questions like what's the difference between simple and exponential, I'm always going to tell you, just Google it. How do I find tickers? I've got a couple of minutes left, so I'll show you that real quick. I'll show you two sources that I use. One of them is great, the other one is amazing. And I would recommend using these sources as well. One of them is paid for the professional version, but you could use the free version for your needs at the moment. I wouldn't recommend getting the pro version until you are familiar with floats and more advanced things like that. Leave that to me, Absolute, Fistful Dollars, and all of us. Now this site is free right here. It's called QuiverQuant. And you could just look at things by very simple scanning. You want to see what's trending on Wall Street Bets. Click Wall Street Bets. It'll tell you, what tickers are mentioned on Wall Street Bets and which one is mentioned the most. Today, SPY was mentioned the most because SPY was outrageous today. Then you have, Senate trading, House trading. It just depends on what you want to see. Hacker News, Stack Overflow, SPACs. For those who don't know what SPAC stands for, it's Special Purpose Acquisition Company. And they're blank check companies. Companies that usually get bought out by other companies after they create something that's worth buying. You could use their API for those that actually know how to use API. And the second one that I use is Benzinga. You don't have, this is the one where I said you don't have to use the pro version. You could just use the free version. They have a great news feed. I watch news for SPY all the time. For me, that's really important. You take that off, it gives you news for every single, every single stock or symbol that you put in. OCGN, one of the reasons why it started moving up today, proven safe in India's largest efficacy trial, the final phase 3 preprint data published. You can click on the news item and go and check it out for yourself. If you have any tickers that you are interested in, like why is one moving, like when STAF started trending, it's gonna print it out over here. They just on Wednesday they announced a reverse stock split. And then I forgot what day the whole France thing came in, that they're going to be opening up locations there. Shares are trading higher, but they're not seeing any price specific news. This is what I don't like. Whenever you see a news article like this, where the shares are trading higher or higher on above average volume, but there's no specific news compared to that company, I'm going to ask myself, is this just a pump and dump? How do you feel about using Fibonacci retrace EXT for small cap intraday run-ups? I don't use Fibonacci sequence, the indicator. And even when I did small cap intraday run-ups and intraday trading, I much prefer to just stick to the basics and just use these the two SMAs and the Kelvin channels. Kelvin channels I actually just started using recently when I started day trading. But when I was just starting off, all I needed was two SMAs, an RSI, and an MACD. For example, if I saw that I'm losing the most money, I looked at my MACD and I saw this bar right here, I knew that the price was about to start moving back up, because this shows it right here. Sometimes you don't get it right off the bat, as you can see here, went back down, but then it did start going back up. So this right here alone, just the RSI and the MACD, will help you to determine when you want to sell, because you never want to sell here. If you're touching the support level and you sell, it's like giving money away. Always try to wait to at least get close to the resistance. You don't want to sell when you're at support, because chances are I'll be the one buying the shares.
Have you ever tried using the TOS Market Watch and going into visualization?
I couldn't hear you. It sounds like you're far away. Try to type it in the chat. No, I don't use TOS Market Watch. I use Active Trader. I use the, what's it called? Flexible Grid. And I use just the regular trade over here. Like if I want to just buy one, I'll go into here. How do I find the tickers to alert? I mean, there's a bunch of ways. One of the ways, like I said, is through Benzinga. You have your chat over here, and they have several different channels, like day trading. But in day trading, people will post stickers that you don't know if they're good or they're not. So I type in usually SPY over here. SPY, you always get different tickers. They always show you, something else going on. I take tickers from here. I take tickers from StockTwits, and then I do my analysis on them. If I see that it has potential, then I will go to I'm really tired, excuse me. I'll go to Discord and I'll do an alert. If I see that it's in a sideways pattern, I'll tell you the price I'm gonna buy it, because usually sideways patterns end up with going up higher with a uptrend. I don't really often see that a sideways pattern ends up in a downtrend. As to what Amanda just said, the 25,000 needed for day trading, Webull cash account, TD Ameritrade cash account, doesn't matter who you use. If you buy $1,000, or let's say you have, I'll even put this into the chat. So I'm going to chat to this screen. If say you have $10,000 in capital, and today, so that would be 0702, you spend 4,000 in capital, you are gonna be left with 6,000 in capital until 0704, or maybe 0705, depending on the trader you use. So it's not truly day trading. When you are truly day trading on a margin account, if I have 26,000, I could buy and spend $26,000 10 times in one day. And on top of all that, my buying power is going to be extended to roughly $104,000. Because day traders, real day traders, our buying power is 4 times higher than yours. But the second we fall below $25,000, we have to either bring our accounts back to 25,000 or above, or we are stuck swing trading and things like that, or having to move money around. So when you have margin, not only if you have 10,000, you are able to spend about 30K. So that gives you, 2-to-1 leverage ratio. And if you have $30,000 compared to 10, you can make much bigger investments, leading to much bigger returns. And with $10,000, you will have, I would say, at least 60K in day trading buying power, but you'll never be a day trader with that. But margin also gives you that ability not to have to wait for your cash to settle, which is extremely good for people who want to actually have control over their money, because it's really, I would say, inconvenient if you have to sit there and wait 3 days or 2 days or however many days, depending on what trade you use, in order to be able to use your money again, because you buy it, you sell it, and then you have to wait for your money to settle back into your account when the trade has been finalized. It's just not a convenient way. So I don't recommend having cash accounts. Plus, with a margin account, you still get 3 day trades per week. So that means you could day trade 3 times a week and execute 2 swing trades in 1 week, and you'll be okay. By the time you are finished with your swing trades, your day trades are going to start rolling back, and you're okay. And on top of all that, you also have the fact that you have more buying power. You have quicker cash settlement. You don't have to wait for cash to settle every single time. Any other questions? All right, well, if we have no other questions, then what I will do is I'm going to post this video once it uploads from Zoom. I'll post it on our YouTube, as well as a link to it inside the, Discord. And I will try to arrange something for either Monday or sometime next week. All the Zoom sessions that we're going to do, I'll get to you in a second, 2021. All the Zoom sessions we're going to do are going to be during after hours, because pre-market, we're busy researching. When the market's open, we're always busy trying to give you guys the best trades, and we also have to work on ourselves. 2021, what was your question? UGII has been a sideways pattern that keeps going down. UGII. But this right here, I would say is a sideways pattern. This was the going down part right here. I would say this would probably uptrend, but it's very rare that I actually analyze stocks in this price range. So I wouldn't really take my advice on it because stocks that are below 10 cents, they're very unpredictable. Whatever happened, whatever happened over here when it hit 16 cents, there might have been a catalyst. It might have just been a simple volume pump. But aside from that, I would not. Security's largest CBD purchase order for 250,000 packs. Yeah, what Athletic Being just said right there, that probably is what happened over there in that catalyst. But securing orders like that, you can secure an order. Doesn't mean it's gonna be sold or when it's gonna be sold. But that's why you saw this catalyst right here. If you were in it, you should have took the money right around this time. Over here, it's floating above or right next to its lower band, but it's not something that I would actively invest in. When you do penny stocks like this, and we'll cover this another night, I'll teach you guys how to use the scanner, and you could use the scanner over here in order to be able to scan things for certain sets of volume, certain stocks in between certain prices, like prices between 0.004 cents to 0.01 cents that cost this amount of money that have this amount of volume. And then you also could scan for relative volume, and relative volume is the increase in volume from regular to normal from normal to today. So if the regular volume is say 100 million, and today you have 200 million, that's when you see the alerts and volume alerts, and that's what we're trying to tell you about. STAF, if I don't want to say the wrong thing, so I'll double check it. I checked BLIN first. I looked at that earlier. BLIN, I'm almost positive is going to go into a sell-off before it, because this right here from 5 to 10, that's like you're begging for consolidation. You're just begging for it. And over here, people already started selling off pre-market. It might go up again pre-market. This was after hours. Excuse me on that. But I definitely watch it before investing into it, and certainly don't buy it at $9. STAF. Now that has a chance of moving, but at the same time, in the past 2 days, it's gone up quite a bit. It's not something that I would invest into blindly, because this right here, this was all sideways. You had nothing. Then it started dropping, and you get one catalyst, and you're off to the races. So prior to investing into this, also, you would need to watch your charts, because nobody's going to be able to tell you for sure how the market's going to react the next day. If they tell you that they could, I promise you they're lying. Yeah, I could do some candle pattern lessons. And also I'm going to post links where you could go and get 2 free books on candle patterns. They're free. All you have to do is, if you want the hard copy version, you pay for shipping. If you want the PDF version, I think there's a link to download it. I'm not too sure about that. I got the hard copy for myself. But yeah. All right, guys. Well, it was nice having you in the meeting today. And like I said, this is going to be posted up onto YouTube, and there's going to be a link to watch it again. If you have any questions, let me know. I don't know if I'll be able to get to them today. And also, for everybody, you know, if you want more things like that, make sure to just stay active on the Discord, invite your friends on the Discord. You could always do invites to our Discord. The YouTube channel name will be made available soon. On the Discord itself, you could always invite people inside of to the Discord. I'm pretty sure you guys would have the same kind of buttons as I do. So if you wanted to invite somebody to a channel, you could always get an invite link. You could always ask Absolute or myself for an invite link. I'd be glad to give one to you. But aside from that, you know, we're going to be trying to, depending on how, of course, it is with scheduling, we're going to try to do these for at least 2, maybe 3 times a week. Don't forget that Monday, the stock market is going to be affected by July 4th being observed. So as Benign said in the chat, happy long weekend to everybody. And yeah, aside from that, thank you for coming. And if you have any friends that want to trade with us, you could always let them know about a Discord. Follow us on StockTwits. And once we get our website up and running, we're going to try to get ourselves even bigger, because the bigger our community is, the more people will be able to contribute. The more people that are contributing, the more money we're going to make. All right, fellas, good night.